And right now, we're going to check in with two investors who can tell us where the market is heading next. From Baltimore, David Eiswert, portfolio manager at Rowe Price, joins us. He oversees the $548 million global technology fund. And here in San Francisco, David Readerman of Forward Asset Management. His biggest positions are in Apple and Google. He also owns Baidu and Qualcomm. So, David Readerman, let's start with you. I mean, up, down, up, down. What's your take on all of this volatility?
Well, investors, and certainly from the portfolio management side, you have to be very agile in navigating the market volatility. You can see from the market sentiment with the VIX spiking from 25 to 45 levels that we last saw in 2008, a lot of fear pricing into the market.
So looking at tech stocks in particular, what have you been doing over the last few days to take shelter or wait this out?
Well, in fact, on Tuesday, I went down to the Valley and checked in with some of my largest positions and other companies, and things look great. Companies are at work designing great new products, and I think the real question is whether the market is signaling ahead a radical slowing in global growth.
David Eiswert, how about you? What have you been doing over the last few days to manage your portfolio and take shelter from the storm?
Well, like David, I just returned from just about a 2-week trip visiting companies. Emily, we don't, I guess, as a portfolio manager and thinking about the big trends that are driving tech, we see 3 big trends: mobile computing, cloud, and the rise of the emerging market consumer. I mean, those things, we're going to go from sort of point A to point B over the next 2 to 3 years, and those 3 drivers are going to be incredibly important. When we have volatility like we've seen in the past few days, what we do with the portfolio is we optimize it. We increase the bets where we have the most conviction. We shed the names where maybe the investment thesis isn't as strong. So the volatility we've seen in the last 3 days has really helped us to focus the portfolio, and again, focusing on the big trends that, despite the real issues we see in Europe and the real issues we could have with confidence in the economy, I mean, what you want to do is focus and hone that portfolio during times like this. So when you come out, you're even stronger.
David Eiswert, what then do you think are the good buys out there, the good opportunities out there in technology in particular?
Well, what's really interesting about right now, if you look at Cisco today and the behavior in Cisco stock, that's just, the asset is too cheap. So on one side of the ledger in tech today, you've got these incredibly cheap assets: Cisco, Corning. You can throw an HP in there. Now, all these companies have issues, they have problems, but they're so cheap, right, that any sign of good news and you get a move like you had in Cisco. I think NVIDIA is another good example. That's something we own in the portfolio as well. NVIDIA is just too cheap at $11, $12 so you can own these assets that are undervalued. The core of our portfolio, though, is focused on, again, the 3 biggest trends we see, which is this shift to mobile computing. Companies like Apple, Qualcomm, SanDisk. This cloud, the idea of cloud, and there's lots of names in the cloud space, and Priceline, Amazon, Cornerstone, all these different names that are focused around the change in the way we deliver services over the cloud. And then finally, names that are exposed to emerging markets. So we're adding names like Apple, Baidu, Sina, which is owns Weibo, which is the Twitter of China. We're adding to names like Priceline again, which is a big position for the fund. So again, focusing on those core names that are going to take us from A to B, and then also looking at the names in the portfolio where the assets are just too cheap.
David Readerman, where are you focusing in times like this?
Sure. Well, since we're running a hedge fund structure, we're looking for both winners and losers. So we focus on disruptive technologies, very similar to some that were mentioned previously. But where we've been successful in the shorts have been, Apple taking share, RIM losing share, Google winning, and Facebook, AOL losing. So we try to apply that domain knowledge and apply it both on the long and the short. I think what's interesting today, Corey picks up on some of it, is that those beaten down names with large short interest positions tended to outperform slightly better. Probably some short covering going in names with still some weak fundamentals.
Now, you've suggested
and David,
that tech investors in this time should take a different approach. How so?
Well, I think tech is one of the great transformational growth industries. It creates winners and losers as platforms and architectures change around the internet, cloud, mobile computing. And so we look for rallies like this to re-express some of those fundamental shorts as the market rallies, and we can get short sales off.
David Eiswert, you wanted to jump in there. What are your thoughts?
Yeah, no, I think David makes a great point, and I would say that over the last 3 years, what we've seen is a huge shift in market cap away from what I think you would call the losers, the Cisco's, HPs, Microsofts, and into new categories where you're seeing disruption. What I think about today, which is interesting, and I'd be interested in David's opinion, is that, you know, when I look at a name like Cisco, I mean, clearly they have problems, right? Clearly there's disruptions in networking that are affecting their business. But at the same time, I think you can go to an extreme. And what Cisco did last night was basically, you know, go back to its knitting in terms of how it's running its business. And at the valuation where it is, even though there are structural problems, I think we've almost pushed that bifurcation in tech to an extreme now. And that's why, like, when you look at a rally like today, you sort of say, look, maybe that short case has just been pushed too far. I understand the disruption that's happening to a lot of these companies, but I think to some degree it's become so consensus around winners and losers that's created some opportunities, at least for mean reversion trades. I'd be interested in David's opinion. Yeah,
thanks, David. Look, you know, I get the Cisco rally today. I think what's interesting for both of us, and I think we've logged a couple years here on the tech track, is we're looking at a new normal. I mean, the new normal for Cisco, John's comments are, rev growth up 1 to 4%. That's very different than up 10 to 14% top line metrics. So you bet. Yeah. Chambers has done a great job on cash flow. There's yield support for the stock, but I think that rebound can only stretch so far.
David Readerman, in terms of the markets, where do you see this going? Is it going to go down again tomorrow? Are we going to stabilize at some point?
Well, I think those viewers of yours that are in the Hamptons and in the Vineyard, the market's only off 2%, for the week. They're like, what's the big deal? The volatility can really affect sentiment. And B of A, Merrill did a call today citing $20 billion in mutual fund outflows on this volatility. So hopefully the market will settle down so that confidence can return to the capital markets. We can focus back on the fundamentals, and then the valuations will express themselves. But right now, we all have to be global macro strategists as well as portfolio managers on industries.
David Eiswert, how about you? Where's the bottom? Is it going to get worse before it gets better?
I think David makes a great point about confidence and the kind of impact that can have on the market. I mean, we have to realize that we've spent really 3 years building up pretty sizable cash balances in a lot of these tech companies. And also I would argue that the supply chains have become brutally efficient in the past 3 years. So the idea that we have the kind of collapse that we had in 08, I think it's pretty remote. I don't think we're going to have that kind of collapse, just given what's happened in the last 3 years in terms of the improvement in the companies. I also think that this is the toughest time of the year for tech in the summer. And if you look seasonally at investing in tech, this tends to be the time of maximum volatility and opportunity. So, I mean, your viewers should think about that. And finally, I think we're going into an election year, and I think one of the big issues could be the repatriation of OUS, of outside the United States cash, and I think that would be a big driver for sentiment around tech. So we're bullish going into the second half. Again, we think this is a profound time of change in tech. There's great drivers. If we can maintain the confidence in the markets, we think the winners are going to keep winning, and that makes it a good environment.
And companies like Apple, Google, Microsoft that do have a lot of cash on their balance sheets presumably are better protected in times like this. All right, David Eiswert from T. Rowe Price and David Readerman here in San Francisco with Forward Asset Management. Thank you both for joining us.